Hello and welcome to the Quality Investor. Today we're talking about the valuation of Applied Materials, ticker AMAT. This business operates in the semiconductor industry. However, it is not a chip designer like NVIDIA or AMD. They do business in the semiconductor equipment space of the industry, and they provide equipment to chip foundries such as Taiwan Semiconductor and Samsung. They have a massive portfolio of over 42,000 products. This and their fast-growing services segment make Applied Materials the largest provider of equipment in the semiconductor industry. And according to Semiconductor and Equipment International, their market position is 30% ahead of other giants, ASML at 25% and Lam Research at 10%. This strong market position is one point of my investment thesis. They are further widening this economic moat as well, demonstrated by their expanding gross and operating margins. If we look at this chart here, we can see the slight uptick in gross margin over the last 10 years, and we can also see the amazing uptick of operating margin percent over the last 10 years to nearly 30%. Most businesses can only dream about margins like that. Before discussing the rest of my investment thesis, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, hit that notification bell so you can know when I post more great stock analysis content. So the rest of my investment thesis is as follows. Here we're looking at a slide from the Q3 2023 presentation Applied Materials did for their earnings release in that quarter. And we can see here the semiconductor industry growing to $1 trillion by 2030. So you can see here what Applied Materials is projecting through the end of the decade. So we're here right now in about 2023, and we've certainly seen this dip in the semiconductor industry as a whole in this year. However, if we look, they're saying we're in the era 4, which is the Internet of Things and AI era. And the growth that they are projecting through the end of the decade is staggering. So we're here probably between about $450, $500 billion in the semiconductor size right now. But that total market is going to get up to $1 trillion by the end of the decade. This is staggering growth, and Applied Materials is certainly going to be one of the leaders over the next decade. Another point is their Applied Global Services. This is essentially their services arm for things like consulting on their equipment, installation of their equipment, maintenance of their equipment, a very profitable part of their business. And they just had record quarterly revenue and on track to grow again in the 2023. 16 consecutive quarters of year-over-year growth. This year, over 60% of the recurring revenue generated from subscriptions, 2.6 years of the average length of the contract, and over a 90% renewal rate. So they're going to have a very strong position for generating revenue over the next few years with their services segment. And in the coming years, we should certainly expect this growth in the services to be at least 10%. And as a prospective shareholder for any business that I like to invest in, I always look at how they reward shareholders. And Applied Materials has a very strong history of shareholder distributions. You can see in the last 10 years, they've grown their dividend by 11% compounded annually. And I expect further increases over the next 10 years in that range, and that far outpaces inflation. And they've also reduced their shares outstanding by nearly 30%. And importantly, they have 10 billion supplemental share repurchase authorization at the end of the quarter, and they still have 13.4 billion total remaining on that authorization at the end of Q3 23. And we can see here that shares outstanding has dropped precipitously over the last few years. So what is Applied Materials worth right now? To answer that question, we're going to go to my investment valuation file to find their intrinsic value. Starting out on my summary page, we have here a few metrics that I like to look at right away. So we have a PE ratio currently at 17.5, which is slightly below their 5-year average and slightly above their 10-year average. And they have a forward PE based on my calculations of 16.4, which is a little bit above their 5 and 10-year averages. However, if we look at their profitability, they have a gross and operating percentages here well above their 5 and 10-year averages, suggesting, like I showed you before, that growing moat. And they also have an amazing return on invested capital of over 30% and an amazing return on capital employed of over 35%. These are staggering metrics and really suggest the quality of the management and how they allocate capital resources. They also pay a dividend of $1.28 per share annually, which is yielding right now at under 1%, and it's under their 5-year averages, suggesting that Applied Materials may be a bit overvalued. But really, to really find the value of a company, you have to understand what kind of cash they will return to investors over the next 10 years. Looking over a few charts, these are their quarterly charts for on their income statement here. You can see the revenue net income chart. They've steadily grown it over the last 40 quarters. Of course, they've had a bit of a lull due to the slowdown in the semiconductor industry as a whole in 2023. They've also done a great job of lowering their expense margins while also increasing the earnings per share, and you can see here that amazing share repurchase program. Additionally, Applied Materials has done an excellent job growing their free cash flow. This is exactly what we want to see out of the companies that we invest in. They've held their debt to equity to under 0.5, and you can see that they are really doing a great job adding to the equity for their shareholders. Onto the projected growth rates for Applied Materials. All right, so we can see here, I'm expecting by the end of this fiscal year that they'll have about $26 billion in revenue, a 2% increase over the prior year, and they will have a free cash flow of $7.7 billion, which is a staggering 68% increase over the prior year, and providing us with a final free cash flow margin of almost 30%. So the way I'm projecting things out for the next 10 years, I took these revenue growth rates over the next 5 years from Wall Street analysts, and I knocked a few basis points off of each of them to be a little bit more conservative. And then I also am expecting their free cash flow margin to expand to about 26%. And I'm expecting their net margin to expand to about 31%. That is based on the idea that they're going to continue to operate more efficiently and grow their presence in the market. And also I'm projecting a share repurchase of about 2.5% over the next 10 years annually. And that is also a little bit less than what they've done the previous 10 years annually, which is over 3.5%. So ultimately, that gives us a compound annual growth rate for revenue of 5.5%, for net income at 7.7%, for earnings per share at 10.6%, and free cash flow growth over the next 10 years of 9.5%. So once we plug in all of those numbers into my discounted cash flow model, we can see here that gives us the present value of the free cash flow over the next 10 years. And if we apply an 8% discount rate with a 3% exit rate, that gives us an intrinsic value of $172 billion. And when we account for the shares outstanding, that's a final discounted cash flow price of $204.72. Coming into our dividend discount model, you can see here they've grown their dividend by about 8.5% in 1 year, 7% over the last 3 years, 20.5% over the last 5 years, and 11% over the last 10 years. That growth is a little erratic and slightly unpredictable. However, this year they're going to pay out a dividend of $1.22, which is almost 20% year-over-year growth. And I'm projecting for the next 5 years, 8% growth in that dividend each year. And I believe thereafter, Applied Materials will perpetually grow their dividend at 6%. And I do not think Applied Materials will have any issue covering that dividend. You can see that their free cash flow payout ratio is at 15%. And once we do the calculations here, we get a dividend discount price of $61.08 per share. And finally, we have our exit multiple models. As comps, I chose Lam Research, KLA, Intergis, Teradyne. And once we average out their PE ratio, that brings us to an average PE of 53.96 and a median PE of 24.3. However, I'm going to be using the median PE as it's a lot more conservative. And with Applied Materials' current PE ratio of 17.46, if we apply that median PE, that gives us an exit multiples price of $184.21. All right, so after accounting for each of the valuation models that we're going to use, what is our acceptable buy price for Applied Materials? All right, like I said before, we have our discounted cash flow, dividend, and exit multiple models. And once we average those guys together, that gives us a valuation average of $184.20, which is a staggering potential upside of over 39%. Now, I'm going to apply a 20% margin of safety just due to the fact that semiconductor industry right now is a little bit down. And that gives us an acceptable buy price of $147.36. I certainly plan to pick up some shares and dollar cost average my position into the Applied Materials up until it reaches this price. Okay, before we go, I do want to remind everyone that this is certainly not financial advice, and I actually do not own a current stake in Applied Materials. However, I do plan on purchasing some very soon. All right, so with that, thank you for watching today's video. And what do you think? I love the feedback, so please comment below and give me your interpretation of the valuation for Applied Materials. And finally, please hit that like button. And if you found this info helpful at all, consider subscribing to the channel. Thank you and happy investing.